And now let's talk about the seek and destroy profile. So what is a seek and destroy profile? It is basically one of the hardest trading environment that you can operate in. It is a profile where the market or price is constantly taking buy side and attacking buy side liquidity, and then the opposing sell side liquidity, and then the opposing buy side, and so on. You will see a lot of fake moves, fake market structure shifts, right? Fake displacements in both directions, right? And so on. So how to identify that you are currently in a seek and destroy profile? Well, you can use the Asian session to identify that. Now, how to anticipate a seek and destroy profile beforehand? That's a subject for another video. Now, for this video, let's only stick to how to know that you are currently on a seek and destroy profile. So let's use the Asian session range. You will see after midnight, you will see a Judas swing, right? So this is normal on a classic sell day. For example, you will see that after midnight, a Judas swing, attacking the Asian session high, right? Or any short-term high to the left, right? And sometimes this Judas swing taps into a PDRA. In our example, a fair value gap. Sometimes both, so taking short-term high and tapping into a PDRA, as you can see here. So the next thing, you will see a move to the downside, right? An expansion to the downside, taking the Asian high. This is a classic sell day, right? And then price keeps expanding down and down and down until the New York session, right? And then maybe we can see a retracement and again expanding lower. This is a classic sell day. But as you can see on a seek and destroy profile, after taking the Asian session low and taking this external liquidity, we are back into the range, right? Taking this short-term high and then attacking the sell side liquidity and then attacking the buy side liquidity. So on a classic sell day, guys, this should not happen, right? Another way to identify it using the broadening formation. So if you are familiar with the strat, right, you can use these two lines right here, and you will notice that we are constantly taking the buy side and the sell side liquidity, right? So as you can see here. Now, the problem with this profile is that the market is not doing this. So let's say we took this short-term high to the left, right? And now attacking the sell side liquidity, and now the buy side, sell side, buy side, sell side. The market is not actually doing this. If the market is doing this, that's easy to trade, because whenever you see a rate on a pool of liquidity, your next target is the opposing buy side liquidity, right? The opposing pool of liquidity. But in reality, the market is doing this, taking buy side, and then it gives fake signals or fake market structure shift of going down, and one more time taking the buy side liquidity and attacking the sell side, right? So maybe doing this, trapping traders and attacking one more time the buy side, right? And so on. So this is why it's hard to trade in this trade environment. It is hard to predict it, right? It is hard to predict the next move of the price. So as you can see here, price took the Asian session high, attacking this sell side, right? Starts going up. And now maybe you are thinking that we want to take this one, but one more time taking the sell side liquidity, right? And now attacking the buy side liquidity, this short-term high. You might want to take the trade from here, this market shift, right? But one more time taking the sell side and so on. As you can see, it is hard to navigate this price action. So how can you trade this? There are some elements that will increase your probabilities in navigating this kind of price action. So the first one is trading with the original order flow. Now, what do we mean by the original order flow? So if we look left, you can see that the order flow before this profile was bearish. So the order flow is overall bearish. So the first thing you want to consider is you want to take only shorts, right? only shorts, no buys. You can take buys, but again, the probabilities will be low. So that's the first thing you need to do. You need to take only shorts. The second thing you need to do is you want to base your trades on a higher time frame period. So if you are taking trades on the 3-minute or the 1-minute or the 5-minute, you can base your trades. So the point of interest is maybe a 15-minute fair value gap, an order block, right, or a breaker, or a 1-hour fair value gap, and so on. So that's the first thing you need to do. Trade with the order flow and basing your trades on higher time frame period. The third thing you need to do is you want to look for SMTs, right? So basically we are on a seek and destroy profile, meaning there will be constantly sweeps on liquidity. The market will constantly seek for buy side and sell side liquidity. And now how to identify that the trade is not a market structure shift and it is only a sweep on liquidity? Of course, using SMTs. So as you can see here, we have an SMT divergence here, and this is my trade, right? This is my short position. We have an SMT divergence with Dixie. So after I saw this break of structure, this displacement and returning to the fair value gap right here, I knew that this is only a fake market structure shift or a sweep on liquidity, because the Dixie didn't take liquidity from the low, right? So this is only a rate on a short-term high, right? So again, trading with order flow, basing your trades on a higher time frame period, and in our case, I used a 15-minute fair value gap, right? And after that, I dropped to the 3-minute and took my entry. And the third thing is the SMT divergence. So these are the 3 things that you want to look for in a seek and destroy profile to successfully navigate this environment. And if you go to here, right, we have another shorting opportunities here. I didn't take it. I only tape read it. So here, as you can see, we took this this buy side liquidity pool right here. And we are on a higher time frame PDRA, right? So we are on this 4-hour fair value gap. So the second condition is check. The first condition, which is trading with order flow, is check. And now we need an SMT divergence. So let's drop to the 5-minute. And let's take a close look at the Dixie. So let's compare this high right here. So this high, right? On the Dixie, right, price took sell side liquidity from here. But on EURUSD, price didn't attack this. So we know that this one right here, right, this market structure shift, as you can see here, a fake move to the downside, is only a sweep on liquidity, and price will eventually reverse, right? So we have an SMT divergence, and after that, what you can see, we have a market structure shift and price starts trading lower, right, attacking the opposing liquidity. So using these 3 elements, you can successfully navigate this profile. And I believe we have come to the end of this video. And if you have any questions, please DM me on my Twitter account or leave a comment down below, and I'll answer you as soon as I can. Happy trading and good luck.